Welcome. In this video, Zbcn coin liquidity has been received. Can it increase? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
Short-term downtrends refer to periods in which the market consistently forms lower highs and lower lows over a certain time frame. These trends highlight the imbalance between buyers and sellers in the short term. A short-term downtrend represents a period of pressure and hesitation for investors, as the price continually moves downward, testing psychological and technical resistance levels. However, breaking such downtrends, that is, when the price moves above the trend line, is a critical turning point for the market and is widely interpreted by investors as a bullish signal. A trend breakout fundamentally signals a change in market dynamics. When the price rises above the trend line in a downtrend, it shows that short-term buyers are returning to the market, sellers' pressure is decreasing, and upward movements are regaining strength. This breakout point also serves as a warning for many technical analysts. The upward break of the trend line indicates that previous selling pressure has ended and that the price may potentially start a new upward move. Short-term downtrends can often be part of a larger trend, and their breakout can create important opportunities for both short and medium-term investors. The price breaking a short-term downtrend is valuable not only as a technical signal, but also as a psychological turning point. Market participants, upon seeing the trend line broken, may end previous selling strategies and increase their long positions. This leads to a rapid shift in supply and demand balance, allowing the price to move higher. Short-term trend breakouts, especially when supported by volume, reinforce investor confidence and make the upward move more stable. Breaking a short-term downtrend is also significant in terms of liquidity. Both small investors and large players often monitor trend breakout points. Before the breakout, many traders act cautiously, but afterward, market participation increases. This rise in trading volume supports the price's upward movement and amplifies the impact of the trend breakout. Since short-term trends can lead to rapid price movements, these breakout moments provide critical opportunities for investors. After a breakout, the price typically begins its upward move by testing previous resistance levels. These resistances are obstacles the price encountered multiple times during the downtrend. With the trend broken, these resistance points start to be surpassed and the price moves toward higher levels. Investors often view the breakout as an opportunity and expand their positions when these resistance points are breached. This provides upward momentum and confirms the end of the short-term downtrend. From a psychological perspective, breaking a short-term downtrend represents a shift from negative to positive market sentiment. Investors who are under pressure during the trend gain confidence after the breakout and participate in buying moves. This leads to a positive change in market psychology and supports the price's upward movement. The breakout can also attract new investors as it signals potential profit opportunities and increases buying motivation. Technically, breaking a short-term downtrend also brings a support and resistance transformation. When the price closes above the trend line, previous resistance points begin functioning as support. This support provides a foundation for continued upward movement and instills confidence in investors. This process strengthens the upward price movement and allows a more stable uptrend to develop. In conclusion, breaking a short-term downtrend is a critical prerequisite for the price to move upward. When assessed alongside technical indicators, market psychology, liquidity, and support resistance levels, this breakout signals a strong bullish direction. Moving above the trend line clearly shows that buyers are gaining strength and selling pressure is decreasing. This breakout serves as both a confidence booster and a source of potential profit opportunities for investors. After a short-term downtrend is broken, the continuation of the price's upward move is considered the beginning of an uptrend in technical analysis and serves as an important reference point for strategic decision-making. But we can't rely solely on trends for analysis. Let's look at the other metrics as well. Stay tuned.
The MACD indicator is a powerful technical analysis tool that shows market momentum and potential trend changes. The indicator is based on the principle of two moving averages converging and diverging, providing investors with important signals to understand the potential direction of the price. When the MACD line crosses or converges or diverges with the signal line, it indicates that a change in the market trend may be occurring. In particular, when a bullish crossover occurs, it generally signals that the price may initiate an upward move and is considered a buying opportunity by investors. A bullish crossover occurs when the MACD line crosses the signal line from below. This technical signal indicates that short-term momentum is increasing and the buyers are gaining strength in the market. For the price to start rising, the supply and demand balance in the market must shift in favor of buyers, and a bullish MACD crossover is considered a precursor to this change. Investors observing such a crossover may strengthen their positions or create new buying opportunities. This process lays the foundation for the price to move upward in a stable manner and gives investors confidence in the continuity of the trend. The bullish crossover in the MACD indicator is not only a technical signal but also reflects market psychology. When buyers see this crossover, they understand that momentum is shifting in their favor and selling pressure is decreasing. This increases investor confidence and brings more buying liquidity into the market. The increase in liquidity supports the price's upward movement and contributes to the acceleration of the bullish momentum. Thus, a MACD bullish crossover serves as a strong indicator that the price could rise, both technically and psychologically. When this crossover is supported by other technical indicators, the strength of the price movement increases further. For example, rising RSI, upward expansion of Bollinger Bands, or breaking of support and resistance levels can reinforce the reliability of the MACD crossover. With these supporting signals, the price may experience an upward surge and surpass short-term resistance levels. At this point, investors can view the MACD bullish crossover as a strategic buying opportunity and increase their positions. Another important factor to consider during a bullish crossover is volume. The sustainability of the upward movement is directly related to trading volume. Increasing volume at the moment the MACD line crosses upward indicates that buyers are returning to the market with strength and that the likelihood of an upward price move is high. A low-volume crossover may indicate that the price movement could be short-lived and temporary. Therefore, investors take volume data into account when evaluating a MACD bullish crossover. The MACD crossover is a critical indicator for determining trend direction, especially for short and medium-term investors. When a bullish crossover occurs, the price is likely to test short-term resistance levels, and if these are broken, reach new highs. This process increases market momentum and allows buyers to strengthen their positions. With the start of the uptrend, investors can make safer and more strategic buying decisions. From a technical analysis perspective, when a bullish crossover occurs in the MACD indicator, the price is expected to move in alignment with this momentum for trend continuity. To sustain upward movement, the price must remain above certain support levels and not be significantly affected by short-term pullbacks. In this sense, the MACD crossover acts as a leading signal indicating that the trend is gaining strength and that the price may initiate a bullish move. Psychologically, a MACD bullish crossover positively affects investor perception. This technical signal shows buyers' dominance in the market and increases investor confidence. Investors observing the crossover provide additional liquidity to the market, supporting upward price movement. Moreover, such a crossover can attract new investors as the bullish signal indicates potential profit opportunities. In conclusion, a bullish crossover in the MACD indicator is a strong signal for price increases. When evaluated together with technical analysis, market psychology, volume, and support resistance dynamics, this crossover significantly increases the likelihood of an upward price move. The MACD crossover is a critical tool that offers buying opportunities, clarifies trend direction, and indicates market momentum. When the price moves in conjunction with this crossover, it is considered a reliable signal for the start and continuation of an uptrend and guides investors in making strategic decisions.
The price dropping below a certain support level is a critical situation from a technical analysis perspective because it indicates that a portion of market liquidity has been activated and sellers are applying short-term pressure. Support levels are psychologically and technically important areas for investors and traders. When the price approaches these levels, buyers stepping in increases the likelihood of balancing selling pressure and the price responding upward. A wick forming below the support level, followed by a rebound, is a classic example of this process, often indicating that liquidity has been absorbed, stop-loss orders triggered, and weak hands removed from the market. Such movements allow strong buyers to enter the market and set the stage for upward price action. A drop below a support level may cause concern for investors in the short term. However, this move typically functions as a trap from a technical standpoint. Selling pressure and triggered stop losses create liquidity in the market, providing opportunities for large players to take positions. The subsequent price rebound shows that this liquidity has been absorbed and that buyers intervened to push the price upward. At this stage, investors can recognize this dip and rebound movement as a buying opportunity and anticipate the market momentum's direction. The price falling below support and rebounding is also important from a market psychology standpoint. This movement signals to traders and investors that the price is near a bottom and that conditions are favorable for an upward reaction. Observing such movements, investors may open positions to take advantage of short-term buying opportunities and support continued upward momentum. Liquidity absorption below support and the subsequent rebound indicates that the trend may reverse or that the existing uptrend could regain strength. Technically, a drop below support followed by a rebound especially if it forms a strong bottom pattern, is a critical signal for initiating an upward attack. In this process, the price first tests short-term resistance levels and can then move toward medium and long-term resistances. These movements increase investor confidence in trend continuity and strengthen buying pressure. Therefore, liquidity absorption below support and the price rebound can be interpreted as a signal for a new upward move in the market. Volume data also plays an important role in confirming these movements. When the price falls below support and liquidity is absorbed, rising trading volume indicates that buyers have intervened strongly in the market. The rebound, accompanied by increasing volume, significantly raises the likelihood of an upward price move. Conversely, a rebound with low volume may indicate a temporary recovery and a short-lived upward move. Therefore, investors closely monitor volume data when evaluating price drops below support followed by a rebound. Liquidity absorption below support and the subsequent rebound are naturally indicative of potential trend reversals or reaction movements. These movements provide significant opportunities for swing traders and short-term investors. The price dropping below support and rebounding is also considered a form of stop hunting. It removes weak positions from the market and allows strong players to push the price upward. This process helps investors understand market momentum and supports increased buying pressure. Psychologically, when investors observe a drop below support followed by a rebound, they perceive that the price is near its bottom and that conditions are favorable for an upward move to begin. This perception leads to increased buying positions, liquidity returning to the market, and the price initiating an upward attack. In this way, liquidity absorption below support and the rebound serve as both a technical and psychological catalyst for upward price movement. In summary, the price dropping below a support level, absorbing liquidity, and then rebounding is a critical technical indicator showing that the market is supported by strong buyers, weak positions have been cleared, and the price is likely to move upward. This movement allows investors to take advantage of buying opportunities and serves as an important signal for the start of an uptrend or the strengthening of an existing uptrend. Therefore, liquidity absorption below support and the subsequent rebound are considered clear and reliable signs that the price may initiate an upward attack.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.